almost every single person that starts trading or investing or whatever comes to a point in time, especially in their beginner period, where they believe that they can make a lot of money with very, very small investments. Essentially, what I'm talking about here is account flipping. And for those of you who don't know what that is yet, you're going to find out probably very soon because there's a whole lot of content on YouTube, on Reddit, literally everywhere, just about making money, a lot of money with very, very small capital, meaning 10x, 50x, 100x in very, very short time periods. Now, if you're a seasoned trader, if you're someone who's been, dabbling with trading for a while now, or if you're maybe even making some money, you already know that all of that is a joke. All of that is crap. That's not how trading works. That's not how money is made in the markets. But if you're new, you're probably wondering, well, what's wrong with that, right? Why couldn't I be, able to deposit $100 and flip that into 1,000 in a couple days, weeks, maybe months, right? And that's a fair question, right? Everybody who's new should, ask themselves or, somebody who actually knows what they're doing this exact question. And the answer to that lays in simple mathematics. In order to make money with trading, you have to risk money, right? So reward takes risk. But with only $100 deposited into your account, risking big in combination with not knowing if you're going to win or if you're going to lose, that simply equals to one thing and one thing only: financial loss. You're going to lose. You're going to lose money. For you to have a meaningful win with a $100 account, you'd have to risk at least 50% if you're trading a 1-to-1 or 1-to-2 system. You'd have to risk at least 50% of the account to make 50 or maybe $100 in profit, right? So essentially, that's gambling, right? But let's just, for the sake of the argument, say that you take a 100% risk per trade and you actually end up winning that trade, right? So you have $100 deposited to your trading account. You take a trade on, whatever currency pair, whatever asset, and you take a 1-to-2 win, right? So you took a risk of $100 to make $200 and you made money, right? So you have $300 deposited to your account. Now, because you are a money flipper, because you're an account flipper, essentially you're not stopping there, right? You want more. So what comes next? Of course, you double down. You take a new trade. You risk 100% of your account in order to make more money. You risk 300 in order to make 600. So the gambling streak just keeps on going and going and going, right? But, someone could argue if you win the first trade, you simply cut back on risk. Yeah, sure. But instead of, having a single, opportunity to make money because you'd be risking 100%, the best you're doing with cutting back on risk is maybe you now have two opportunities, right? If you only risk 50% per trade, you now have two available losses before your account is blown. In the grand scheme of things, that is still basically nothing, right? Anybody who knows literally anything about trading, about statistics, about, the whole math kind of aspect behind trading understands that two losses in a row are not only incredibly likely to happen, they are guaranteed to happen if you're trading for long enough, right? If you're only opening a single trade, like one trade in your career, and it's a winner, and you stop trading at that point, okay, you're a profitable trader, you were a profitable trader, you are a retired trader now, whatever. But if you keep going and trading and blah, 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 you're going to end up with a losing streak sooner rather than later, right? So even if you have two available opportunities to make money on your account, that is sadly not enough. But again, for the sake of the argument, let's say that you end up risking 100% of your account again. So you risk $300 to make $600 because you're trading a 1-to-2 system. Now, at the end of the day, you have $900 in your account. You're feeling incredible. You're feeling all good and mighty, right? So good, in fact, that you decide to take another trade because at this point, like risking 900 per trade and making 2R on that, you're basically making $2,000 in a day, right? you're basically an incredible trader. And who doesn't want to make $2,000 in a single day, in a single trade, right? You end up taking the risk, you end up blowing the account. So you see where this is going, right? No matter how many times you win in a row, doubling down on your risk, doubling your account every single time or even tripling it or whatever, doesn't matter, because at a certain point in time in the future, one trade away, two trades away, maybe three trades away, you're simply going to blow the account, right? And oh, but I'll just start managing risk later down the line. Okay, that's great, but that's great on paper. How many people actually do that? Nobody. Literally nobody that's gambling, that's, trying to make money with flipping accounts, with risking too much of their capital per trade, with, this very, very poor trading behavior. Literally nobody fixes their ways and starts trading properly once the capital grows. Nobody. If you want to do this trading thing right, you have to do it right from the start. Low risk, low return, consistency, long-term approach, depositing more money, investing the wins, compounding your gains. That is literally the only thing you'll ever make any money trading. If you think that account flipping is still a good thing to do in 2026, you are borderline insane.